Hello, everyone. Thank you for joining me today. Just allowing you to take a brief moment here, allowing you to read the risk disclaimer. All right. Standard risk disclaimer in the industry. You got to post it. All right. Okay, so we're going to move on to the next slide here. So we got some exciting news today. We are going to be talking about microfutures, what they are, and as well as a new strategy that trades the microfutures market. Okay, so MIcroFutures Advantage, all right, is the new strategy. We'll be going over an overview. There's 4 bullet points we're going to cover. We're going to be introducing the strategy developer, which is Luca Fascini. Why trade the microfutures markets? We'll be going over a market overview of regarding MIcroFutures Advantage, and as well as the performance details. All right. So get to know the strategy developer, Luca Fascini. All right, so Luca has been around for over 20 years. All right, so he's got 20 years experience in the market. He is great at challenging common assumptions, developing systems with methodologies that can be optimized for buy and sell signals. So he's been around the block a few times. He has a CTA. He was a CTA, commodity trading advisor, futures options broker, system developer, prop trader, market analyst. So he's got a lot of experience in the market. In trading, Luca is also a published author and speaker on topics of stocks, options, futures, forex, commodities. So he's very knowledgeable on that side. He's created hundreds and tested hundreds of trading systems in his tenure in the market. All right. And then he understands risk control because he's tested and developed and traded hundreds of different systems, and he's got his vast knowledge. He understands risk, order placement, trading advisory, broker management on that side. And he does test his systems 110% before going live and releasing them to the general public. So Luca's got a vast knowledge and experience in trading and developing systems over his lifetime of being in the markets. All right, so moving on. So Micro Advantage, why microfutures are the ideal instrument for small account diversification. So there's several reasons to consider microfutures. Number one is small margins. Microfutures contracts are 1/10 of the size. So you can actually start out with a low account balance and have some opportunity out there with less risk. All right. Multiple markets. So because the margins are so low, you can trade multiple markets on that side of it. And that is going to basically reduce your overall account risk. All right. Non-correlated markets. This is very key because prices on stocks, commodities, currency, interest rates move in different ways. As we all know, when you trade non-correlated markets, guess what? Your equity curve gets a lot smoother because as one system is seeing some adverse conditions in the markets and seeing some losses, you have other systems that are non-correlated to that movement seeing a nice return. All right. Hedging advantages. All right. So positions in stocks and equity options are subject to losses. All right. So when the market moves against us, like we saw last year during the pandemic, when the market had a correction and a crash, right? So on that side of it. But when trading futures, during those periods of time, because we're trading non-correlated markets and strategies, well, what we do is we actually short the market, right? So with futures, you can buy long or sell short. You can on that side, or buy short, sorry about that. So it gives you some advantages on the hedging side, all right? So MIcroFutures Advantage market overview, all right? So this is the first ever market microfutures portfolio offered to the general public. So it gives you an opportunity, number one here, to diversify a traditional portfolio, all right? And for a very reasonable small investment. Number two, micro portfolio is composed of 5 different markets and 6 systems with different logics and time frames. So specifically, there are 5 day trading systems trading the S&P 500, the NASDAQ, gold, the Dow Jones, and the Russell 2000. and one swing system, meaning you could be in the market for a couple of days or maybe up to 5 days, trading the NASDAQ. All right. The systems are built and tested for robustness, and they run on the servers of regulated brokers, okay, for the best execution. That's number 4 here, that are in auto execution. Okay, let's jump over to the performance summary. So over here to the right, I just want to go over this with you. So the initial capital that was started here was 7,000. If we come over here to the left, the trading period is going to be from 2016 through 2021, about 1,900 days. All right. And we're going to look up here as far as the total net profit. That's going to be $44,814, right? Which gives us a return on initial capital of 640%, an average annual rate of return of 122%, and about a little over $700 a month average on your profit factor. Okay. All right. Average winning trade, average losing trade. So the system has done very well over that period of time, all right, trading the micro futures markets. And we'll give you a quick overview here on the periodical returns, right, give you a breakdown. As you can see, we've seen a lot more positive months than negative months, but you are going to see those months and days and weeks that we do see losses. That's inevitable. If we come over here to the right, 2016, we had a 68% return, 2017, 45% return, 2018, 116% return, 2019, 108% return, 2020, 250% return, and this year, up to the first quarter, we're up 50%, all right, on that side of it, all right? And as you can see, when we saw that adverse, remember, movement last year, when we saw that crash during those periods of time in 2020, in February, the system saw a 34% return, 54% return in March, 6% return in April, May, June, very nice returns as the market started to go in a bullish direction, all right, on that side. All right, so here's the equity graph. So we're just going to give you a quick overview. System started here with about 7,000. And I want to point out, once again, I pointed out this in the last slide, but you are going to see losses. There are going to be times where we see flat periods, right, and drawdown, okay, flat period here. But without those, you won't see this, right? So you got to see the losses before you can see the recovery, okay? So that is going to happen, all right? They go hand in hand. All right, everybody, thank you very much for watching the video with us today. Please contact us directly if you have any more questions. We'd be happy to answer your questions regarding the micro futures market and the strategy itself. All right, happy trading, everybody. Have a great day.